all the central banks buying gold, and now we see the U.S. bringing it in. The biggest money in the world is buying gold and silver, period. The United States is pulling in massive amounts of gold and silver, period. The most sophisticated and well-informed traders in the world are telling you the price. People focus too much on price. Look at the price of gold, how it just keeps on going higher quietly, breaking through, pulling back, trading in a range, going up, breaking through,
back and fills,
but it's not doing it in a manner that people have grown accustomed to in this country, where instant gratification isn't fast enough, so they blow it off. Silver and gold are what is known as Giffen good, which means that as prices rise, demand increases. There are very few things that are like that. And so as the price goes higher, more and more demand will increase, whether it be industrial demand, whether it be monetary demand, or people who are getting FOMO. Most assets, as they go much higher, they start to lose demand. That is the opposite of this. And so when we see these things,
the next Federal Reserve pivot could be the spark that sends gold and silver into a powerful rally. Andy Schectman emphasized that gold's resilience during periods of rising interest rates defies conventional expectations, proving its role as more than just a hedge. He argued that if the Federal Reserve pivots back toward cutting rates, it will signal to institutional investors that austerity and balance sheet normalization are no longer priorities, an inflection point that could serve as rocket fuel for gold and silver. In this context, gold is steadily decoupling from outdated narratives and moving toward recognition as a core monetary asset in times of instability. Andy Schectman noted that the performance dynamic between precious metals and Bitcoin has shifted over the past 18 to 24 months. While Bitcoin once captured the spotlight, gold and silver have quietly outperformed it, supported by central banks accumulating record amounts of gold. He pointed out that even the U.S. has joined this trend, importing massive quantities of gold and silver. To him, the actions of central banks and elite traders signal far more than words. The quiet, deliberate remonetization of gold is already underway, with price being a secondary distraction. Andy Schectman also highlighted silver's rising strategic significance. He explained that the U.S. government's reclassification of silver as a critical mineral effectively places a policy-driven price floor under it, as it becomes a resource with national importance. This move elevates silver beyond its traditional role, making it both an industrial necessity and a monetary asset. Taken together, Schectman sees gold and silver not just as safe havens but as fundamental pillars in the foundation of a new global monetary system. If you found this video helpful, don't forget to like, share, and subscribe to stay updated. We'll continue delivering sharp insights and expert perspectives on the forces driving gold, silver, and the broader financial landscape. Thanks for watching.
Traditionally, when we see it from 2007 to 2011, was a big rate cycle decline. Gold was up 118%. And from 2020 to 2021, they tried to lower rates. You saw what happened. The 30 and the 10-year went up commensurate with the decrease in the federal funds rate. Gold went up another 35%. So historically, it would do very well. And I would like to add to that point, gold has held up, in fact, gone up in a rising rate environment, which is the antithesis of what one would expect, because gold pays no coupon. So the higher the interest rate, the less incentive it is to hold something that doesn't pay any interest. The fact that gold held up and went up in a rising rate environment, when they switch and pivot to lower rates, it would signal to the big money buying gold that the Fed has given up on austerity and normalizing their balance sheet, and this is what would put the rocket fuel under gold and silver. Going to do the top 10% of America now holds 93% of the wealth. The bottom 50 holds 2.5% of the total wealth. And this is the issue in and of itself. With lower interest rates, asset prices go higher. So does the cost of living, but you don't care when your assets are going straight up. Where it really hurts the people the most is in the bottom 50% who are trying to put food on the table, gas in their car. Just the basic costs of living are continuing to go higher, and they don't have assets. And their wealth is in dollars, which is losing value 11% this year against a basket of other currencies. But the point is the same thing. It's losing purchasing power against real commodities, real assets like gold. The greater fool theory is what it is.
Quite frequently.
It is. But from a standpoint of performance, silver has outperformed everything, including Bitcoin this year. From a standpoint of performance, it's been over a year now, maybe two, where if you measure Bitcoin in gold ounces, gold is outperforming Bitcoin. over the last couple of years in measuring it in gold. And many of the things that are very expensive right now, like food, like housing, like tuition, measured in ounces of gold, are actually going down. And that is because it's the value of the dollar that we measure things against that is losing ground so precipitously against other things. So you're right, it should be. But, again, this is one of these deals where gold and silver have outperformed every traditional asset, with the exception of Bitcoin, since its beginning. But that trend has changed actually fairly significantly over the last year and a half to 2 years, with silver and gold outperforming Bitcoin. There are some things about silver that I would like to discuss that most people don't talk too much about, but I think it is very, very important to highlight some of the catalysts, if you will, with silver right now. One of which is the reclassification by the U.S. government recently, just reclassified silver as a critical mineral. And because it is a critical mineral, to me, what that means is that there's a floor now underneath the price of silver. The U.S. government is openly accumulating it. Look at the amount of silver coming into COMEX, and this is well beyond the average speculator. You're talking billions and billions every single month. One of the interesting things about silver going on right now, we talk a lot about the short squeeze in London, where they have the lowest free float amount of silver that they've had in history since they started keeping records. They have less than a day's worth of trading, about 145 million ounces. With gold right now, we are seeing what's called open interest. Open interest increasing. That means more people are coming onto the COMEX. You're seeing more and more volume, and the price is going out. Price is breaking out of consolidation. This is the normal link between buying and higher prices. In other words, more people buy, the price goes up. With silver, it's different. The rally is being driven by speculators, but not by speculators, but by a synthetic short squeeze, in my opinion, because the open interest is going down, which means there aren't people buying. The hedge funds are moving away from buying silver right now, yet the price keeps going up. And that is because of the massive amount of deliveries and the little bit of product in the vaults that are able to deliver coming out of London since August. So we've seen 58 million ounces since late August, 10,550 tons year to date coming out of London. This is pointing to physical liquidity shrinking, mounting pressure on the market. So when you talk about the LBMA, data shows that they trade over 600 million ounces of silver per day, and between 1 and 2 billion ounces in paper claims, yet they only have 140 million ounces available to be delivered. What can possibly go wrong? There's a chance you can't say definitively anything, but in my mind, no, because gold is now being remonetized. It is becoming part of the fabric of the new monetary system. When the biggest institutional traders in the world, that being Wall Street, starts buying as much gold, bringing it into the country the way they are, you should take notice. When the central banks have been on a buying spree like they have been, you should take notice. And in looking at I mentioned this to you last night, Eric, when you talk about S&P 500, it's up 1,650 points in the last 5 months, which is one of the strongest rallies ever, or in decades for sure. Gold's up 37 after today, about 38, 39% year to date, which is almost 4 times the S&P's return since 2023. Gold is up 100% versus 67% for the S&P. But this is amongst one of the AI boom, the biggest tech story ever since the internet, and equities are still trailing gold. And I think that what you see are markets and market cheerleaders that are celebrating AI, but gold quietly and silver is telling the real story about where the big money is going, where confidence and capital are moving. Poland's central bank announces plans on Wednesday to increase its gold holdings to 30% of its reserve assets, aiming to strengthen its country's financial security. In these difficult times of global turmoil and the search for a new financial order, gold is the only safe investment for state reserves, said NBP Governor Adam Glapiński. He's the head of the Polish bank. He's proposing a motion to the bank's management board about raising its reserve gold target to 30% from 22, would be one of the biggest in the world. But this is the same guy, and I want people to think about this for 1 second. This came from the head of the Polish central bank. He said, And this is when they asked him in 2023. It was in June of 2023. He was asked why they had just bought 15 tons of gold. He says, "We must be prepared for the worst," said Klipinski. When does the central bank gold? Why does the central bank hold gold? Because it retains its value even if someone cuts off the supply to the global financial system. Of course, we do not assume that this will happen, but as the saying goes, fortune favors the prepared, and a central bank must be prepared for the most adverse circumstances. This is why gold has a special place in our currency management process. So, you know, cutting off the supply to the global financial system, what does he mean by that? I guess maybe we'll find out, perhaps, maybe not. But the point of it is, when you have a central banker coming out and pushing back against the current monetary order and saying this is why we own gold, but this is part and parcel of all the central banks buying gold, and now we see the U.S. bringing it in. The biggest money in the world is buying gold and silver, period. The United States is pulling in massive amounts of gold and silver, period. The most sophisticated and well-informed traders in the world are telling you the price. People focus too much on price. Look at the price of gold, how it just keeps on going higher, quietly, breaking through, pulling back, trading in a range, going up, breaking through.
Back and fills.
But it's not doing it in a manner that people have grown accustomed to in this country, where instant gratification isn't fast enough, so they blow it off. Yet here we are at the end of the race so far, the midway point or wherever we are, and the tortoise leads the race.
No doubt about it.
And I think that's why price isn't the important part. What's the biggest money in the world doing? And they're telling you if you pay attention. You know, in 1980, the average cost of a new car was $7,600. Today, it's $48,000, 6 times higher. But the government CPI says car prices have only doubled since 1980. Why? CPI makes what's called quality adjustments for features like airbags and cameras. On paper, that looks like less inflation. In reality, you still pay $48,000 to the dealer. Bottom line, inflation feels higher than the official numbers say. I was just reading that in a Financial Times article, but that's the thing, is that we are being lied to. And you're right, gold, if you measure anything in your daily life that you spend on in ounces of gold, it is going down and down and down. The prices are going down. In the dollar, prices are going up. In other words, prices aren't going up, the dollar is going down.
Andy Schectman explained that gold and silver behave unlike almost any other assets, functioning as jiffin goods where rising prices fuel stronger demand rather than suppress it. He stressed that their unique nature is further reinforced by the fact that they are no one else's liability tangible assets entirely in the control of their holder, unlike securities dependent on counterparties. This distinction is playing out in real time as the U.S., once never a net importer of gold, now brings in billions, with COMEX data reflecting historic inflows. To Schectman, these movements confirm gold's place as a high-quality liquid asset, regardless of how regulators define it. Andy Schectman contrasted the quiet strength of gold with the speculative frenzy in equities, where retail investors are dangerously overexposed through leverage and options while insiders steadily reduce their holdings. At the same time, gold has not only outperformed the S&P and Nasdaq but has also attracted unprecedented inflows and central bank accumulation, signaling where sophisticated capital is truly moving. Schectman argued that the divergence between media narratives and actual capital flows underscores the deeper reality gold and silver are regaining their role as the ultimate foundation of wealth preservation. Let's get back to the interview.
Silver and gold are what is known as giffen good, which means that as prices rise, demand increases. There are very few things that are like that. And so as the price goes higher, more and more demand will increase, whether it be industrial demand, whether it be monetary demand, or people who are getting FOMO. Most assets, as they go much higher, they start to lose demand. That is the opposite of this. And so when we see these things, the fact that gold and silver are assets that are simultaneously no one else's liability. In other words, what you have hidden in your home, which we're going to pass out your address later, you're the only one who has access to it. No one else knows about it, right? What does that mean to you coming from a world of securities where the liquidity is based upon also the solvency of the brokerage too, right? You know, when you hold gold or silver in your hand, it resonates. Man has been in search of it for 6,000 years. I would argue it's almost in our DNA. And I think the financialization of the world has gotten to a point where gold and silver have fallen out of favor. They say that history doesn't always repeat, but it often rhymes. And here we are 6,000 years after gold and silver were mentioned cumulatively over 700 times in the Bible. We're the most well-informed traders in the world, whether it be across the globe on the central banks. And to me, 10 times more adding fuel to that argument, the sophisticated traders in the United States who are now bringing it in. We have never been a net importer of gold. And now we are bringing in billions and billions. And now the gold that is coming into the COMEX, the billions, and well over 150 billion since November, is being recorded. A guy that I follow a lot, Vince Lancy, who I think everyone, if you don't read Vince, you have to. He's as smart as they come. He's saying 85% of the metal that's now coming in, that is being purchased by the central banks, is being bought directly by local and artisanal miners, or places around the globe that are able to be brought into private vaults like JP Morgan's vault or whatnot, that is not coming into COMEX, that is not being recorded. Suffice it to say, the amount of metal coming into the United States, it's 4 feet of snow on the first tee in the middle of July on our golf course. Now, if you had snowmobiles at home, you wouldn't have them shipped down to Florida from New York or from Minnesota, where mine are, knowing it's an anomaly. What we are seeing is a historical anomaly in every sense of the word. And what I take away from it is that people at that level, if you have that kind of bread, your friends are very powerful. You are circling amongst people who have the information. And all of this metal, they don't do this just for shits and giggles to bring in billions and billions and billions every month. Something bigger is at play here, has been for years with the central banks, and the United States has remained out of it until Trump won the election. And like that, we are now the largest importers in the world. Something bigger than what we are being led to believe, and people focusing on price are missing this. The price will take care of itself. The biggest money in the world always positions before the herd does. They're well positioned before the public says, oh my God, I need to buy gold and silver. Well, it is a high quality liquid asset. It's not, there's a very small delineation between high quality liquid asset. God, I just was polished up on this a few weeks ago. One of it has to do with liquidity ratio, and the other has to do with, let me put it to you this way. That doesn't matter. The powers that be do not want it to technically be tier one. It is tier one in terms of its balance sheet. It is not tier one in terms of its liquidity ratio. So they don't want it up there to compete with bonds for the obvious reason, but the central banks are accumulating like it already is. And if you think, what is HQLA? It's common stock and bonds. And so you're talking shit upon shit, right? You're talking things that are going to collapse in a rising interest rate environment. And gold, which is being accumulated at levels no one has ever seen before across the globe by central banks, and now in the US, doesn't have that little tweak in definition. Who cares? That is just like everything else they've done that is thrown at it to throw you off the scent. The fact that it is tier one in every other way, to me, doesn't matter. It doesn't matter that it's not a liquidity ratio thing, but it certainly is in terms of their balance sheet.
All right.
All to my clients' houses. And I would say something like this. I would say, Eric, I sold you 1,000 MS62 $20 Liberties over the last several years. Gold right now is $1,000. I will pay you a 70% premium over spot for those, where you probably paid a 12 or 15%, because that's how much these older collectible coins were. I'll pay you 70%. And what I'm going to do is I'm going to bring you 1,700 gold eagles to switch. And most of my clients did it. And so I was giving people, depending upon the grade, between 50 and 80% more gold in the form of gold eagles. I would come to someone's house who had high grade stuff, maybe 500 of them, and I would bring them 800-900 gold eagles. It was the smartest, best call I've ever made in my career for the clients.
Oh, yeah.
And so markets move in a pendulum fashion. That was this side of it. Now it has swung back through fair value, and now we're on this side of it. You buy numismatics now because maybe you have a shot at safety from confiscation. Maybe you don't. You have better upside potential. Yeah. You have a piece of Americana. You have something that is truly unique and special, is 100+ years old. I'd rather own that, period, than anything. If the premiums are
commensurate with the value, and in this case they are way commensurate with the value.
Yeah.
You don't buy it because someone says they're going to take your gold. Even though it does give you a fighting chance, you don't spend huge premiums for rare collectibles for that reason. You're just putting yourself behind the 8 ball. NASDAQ is going nuts, right? The S&P going nuts, and yet gold's outperformed it. And where's the media saying, by the way, do you know gold outperformed the S&P and the NASDAQ over the last year? Forget about NVIDIA, forget about all of that. They don't notice it. It is by design. The biggest money in the world is behind this. And who owns every TV station, radio station, newspaper, every magazine, everything in the United States is owned by 4 companies. 4. The information, including through Fox News, is filtered down to the public in a way that they want you to know. This is for national security. And I would argue that all the gold coming in, and probably a lot of the silver, is being accumulated by Treasury Secretary Bessent under the guise of the Exchange Stabilization Fund, where if it's done under the auspice of protecting national security, Congress doesn't need to know about it. That is what I believe is truly happening, because when you have this kind of money coming into the COMEX, if there was any journalistic integrity left in this damn world, it would have been covered on 60 Minutes a long time ago, being like, what's going on with all the gold coming in here? And by the way, the BIS calls it a tier 1 asset, and the central banks and all the... Who's buying it all? By the way, do you know the central banks have bought more than any time in history the last 5 years? Not a damn word. All we hear is Bitcoin and NVIDIA and Apple. And who's leaving all of those, the 3 biggest shareholders, board members of NVIDIA have been dumping stock like it's going out of style. Yeah. Bezos has sold almost $7 billion in Amazon since June 1st. The insiders are selling at a 7-to-1 clip, and $500 billion in cash. And the retail public right now fully invested in the equity market more than any time in history ever. The highest amount of leverage ever in margin debt, and the largest exposure to over $1 trillion, and the largest exposure to options ever. So the retail is all in on leverage and margin, and at the same time, the insiders are tiptoeing out. At the opposite end of the spectrum, more money is coming into the COMEX than we've ever seen before, ever, and not a word about it. And it's outperforming the S&P, which has been on a wicked run, and the public wouldn't know a freaking gold coin if it fell on their foot. These are the things you pay attention to, not the price. The price is the greatest tool of misdirection, period. Price misdirects people. What's happening behind the scenes in an asset that you can control the price through naked shorting, and that's what they've done forever. That's why they trade 400 or 500 pieces of paper for every 1 ounce, so they can control the narrative and keep people from doing exactly what they're doing across the globe. They said,
gold and silver stand apart as assets without counterparty risk, quietly accumulated by central banks and powerful institutions, while retail investors chase overvalued equities with record leverage. Despite outperforming major stock indices, their strength remains buried beneath a media narrative designed to misdirect attention toward tech hype and fiat-driven illusions. Behind the curtain, insiders are exiting equities, central banks are hoarding tangible reserves, and the very price signals the public trusts are distorted by paper trades. The real story isn't in the headlines, it's in the quiet transfer of wealth toward hard money. Do rising gold and silver prices signal genuine demand strength, or just another wave of misdirection? Stay tuned. If you're interested in real, data-backed insights on the financial system, be sure to like and subscribe so you never miss our weekly updates. Thank you for your support, and we hope you enjoy the video.